Hello and welcome to episode 61 of the Craving Crypto podcast. Today is a little bit more casual as I've been working on some other things for high altitude, but we're going to get right into it and go over a quick market overview. The topic of the day is, will Bitcoin go to 1,000 per coin or not? So let's get right into this. So I'm going to start off with Bitcoin here and go into the move that we saw from the $5,900 level down to the 786 at around $4,000. We bled a little bit below here into the 3,000, about 36.76 here on Bitfinex with Bitcoin. But overall, this move was really quick and people everywhere are panicking a lot. I've started to see a lot of 1K predictions, and so that's why I wanted to address it today, to give you guys my perspective on whether Bitcoin will test $1,000 per coin or not, from market cycle analysis and just what I understand about technical analysis in general. Anyways, overall, we have a couple different wave counts that I'm looking at here, and there's going to be one that I would put at the highest probability, and that is this WXYXZ correction. This means that every single leg in the market is an ABC subwave. So a leg, for example, is from this $20,000 level down to the $6,000 level. That was a leg down in the market. And then you had a leg up to this level right here at around 1,100, and then you had another leg down to around 5,900, and then you had another leg up to around 82, then you had another leg down to around 36. Those are legs in the market. Now with these legs, you can count inside of them the subwaves of that correction, and with this WXYXZ correction, everything's an ABC. So you have A, B, C, A, B, C, A, B, C, A, B, C, A, B, C. So those are the subwaves of the WXYXZ correction. Now, if you guys are new to Elliott wave theory at all, and you're sick of hearing about WXYXZ corrections, just pause. It's okay. I know there's a lot to take in sometimes. All you really have to understand is that after 5 waves, you're going to get a corrective process. That corrective process is going to be defended by the bulls at different Fibonacci support levels. The strongest ones end up being the 50%, the 618, the 786, and then altcoins and really illiquid markets, ones that don't have as many people trading them or as many long-term investors. Sometimes you'll get retracements to an 88% retracement, or really ridiculous markets can retrace to the 95% retracement. You know, you could go look at like Apple or Amazon, some of those early tech stocks in their first cycles, because they were super illiquid and there wasn't a lot of exchanges to trade them on. They went up to 90%, and we're seeing that with a lot of the altcoin markets. Now with Bitcoin, Bitcoin is a lot more liquid. In fact, Bitcoin is becoming extremely liquid, and all over the world there's exchanges to trade it. Whereas things like the American stock market, it's not as accessible to nearly as many people. So yeah, you see it as having a lot of liquidity, but you have to remember Bitcoin being completely decentralized and open to everybody everywhere, having no rules or boundaries, and will get adopted and has a lot of different places that it can be traded at. So that liquidity is strong, you guys. I do not suspect to see a retracement to the 88 or the 95% level with Bitcoin. Liquidity is very strong, but I will say that that is a previous support level. Let's get into the details as to kind of what you would see from an Elliott wave perspective if you went all the way down to the 88% retracement or even the 95%. The only count that I could clearly get on this that still matches the rules of Elliott wave theory is that this would be a big ABC correction. So this is an A and a B, and then this would be a C. Now that would mean that we have made this would be 1, 2, 3, 4, 5 waves down. So this is a 1, 2, and we're in the 3 wave. So that means that we're going to get a bounce. If this is the correct count, we'd get a bounce up to the 6,060 level, somewhere around 6,000, and then another drop down to that 88% level. And if for some reason on some exchanges panic got crazy, you could test a 95% retracement. So that would be the Elliott wave count that would be valid to see another low. Right here you'd get, as you can see, from that 3 to that 4 wave, you'd get that final subwave in the 5th wave for the between the B to the C of the ABC correction. So that's, as a technical analyst and as an Elliottian, that is the only thing that legally follows all of the Elliott wave theory rules that can give me a standard argument for any of those retracements. Now, the market structure, in my opinion, looks more WXYXZ. And also this 1, 2 wave, this is an interesting 3 wave right here, because this is a 1 and a 2 wave structure. So we don't really have any type of completed 3 wave. This 3 wave only has a 1, 2, 3. So that would mean that we would need a little bit more data, more market structure before we could consider this count to be very probable. But that's kind of what I'm looking at here as an alternative. Now, we have already met the target. So that would be the potential. That's the way that it could technically go to that level following rules of technical analysis. But I will say that the target of this triangle right here, this symmetrical triangle that we formed, we started to break out of right here where we got that volume spike, and I figured we were going to go ahead and get above this 618 fib level. We rejected off that 618 fib level and we went down for the 786. So we tested another major support level. But that target has already been met for this trading pattern, and we have seen more volume than we have seen since the standard declining volume that you get when you expect another bull run to come into a market. Because if there's falling prices and falling volume, that is an accumulation pattern, and that is what we saw right here at the top of the market. Lots of volume, falling price, falling volume. We got a bit of a spike right here, some capitulation, and then we got more falling price, more falling volume, and then we got this huge move down right here to the 786, and this is a depression move in the market cycle. So this is a very depressive move. I originally thought that this would be the depression because we felt support a little bit right here and everybody's stop got taken out. So I figured 59 would be a good spot to be seeing that depressive move. That wasn't the case. The 786 is looking a lot more like a depressive phase of a market cycle, and I wouldn't be at all surprised if we get a V kind of shape right here. This is a perfect wave down right here. If we got some type of a V and then that curling structure and some type of a trend to develop on the short term for a relief of that selling pressure and more of an upside movement. So that's my update for Bitcoin. I really see this as a WXYXZ correction. My first count for Bitcoin was that we had an ABC right here. Now, as an Elliottian, you adjust as the data goes and you accumulate, especially these bigger cycles, because you've been averaging out at the 3, the 4, and the 5th wave. So right here, you're adjusting. If you get more data, we had a support failure right here. So then my standard correction was a WXY correction. WXY standard Elliott correction. We had all the subwaves for it with the triangle pattern right here. If you go look up complex Elliott wave correction and see a WXY correction, it looked exactly like Bitcoin did. And then we made another low. We got more data. That allowed us to count a WXYXZ correction, and we have a perfect subwave for it, WXYXZ. So that's working with the market. That's allowing the support levels to do what they're going to do. If they fail, they fail, and you adjust your count because you've already scaled out. You've been taking your profits in the upward movement of the cycle, and you're playing these swings. So that means that you're going to be accumulating the panic and allowing it to paint the picture that it wants to paint. And this is the picture that Bitcoin is painting, you guys, and it from an Elliott perspective is a WXYXZ correction, and the only other alternative I could think of would be an ABC that could take us to an 88% retracement. But you guys, personally, with this volume coming in and the amount that the altcoins have retraced, which I see as being much less liquid market, something more like an Amazon or like an internet tech stock that's going to be more bubbly, they're going to retrace really hard. Check out some of these altcoins. You've got your Ripple that is just retraced all the way down from the top, all the way down. This is a 92% retracement. You guys, those are the percentage drops you're talking about when you get a big super cycle come back from an Elliott wave correction. So with altcoins already being retraced at super cycle levels, another low in Bitcoin is most definitely possible, but I'm going to lean on the vote that we at least go for 6,000, the 6,000 level, before we potentially drop lower if we do test the 88. And aside from that, I see this as a WXYXZ until we can get more chart pattern and data to prove otherwise. But this volume is looking good, and I'm happy with a lot of the top movers right now. Like Nexo, I'm watching really closely because it's starting to get some, it's fallen on the support of this market structure right here between the 3 and the 4, and it's starting to paint the beginning of another cycle from what it looks like. If we check out the actual top mover for the day, we can just scroll down here. Bitcoin SV down 24% right now. What the actual heck? Oh, I'm gonna put right down right now on my notes to make my video about the two Bitcoins, the Bitcoin Cash and the Bitcoin SV fork, so that we can all go over that in the high altitude channel and discuss kind of my thoughts on that. Look at the green in the crypto space right now. All this panic is just getting eaten right up. We've got Bitcoin private up 26%, which may be the top mover. Yeah, that's the top mover. Raven, again, performing well. So we'll check out Bitcoin private really quick here. Bitcoin private dollar. This accumulation cycle is big. So this could easily start another wave up. And if this plays a wave, you guys, it can test any of these resistance levels up here. It can go up to previous parts in the market. Markets have memory, so they remember prices and they go retest them again. This right here is starting to look like, well, this is still very, very downtrendy. So we're not gonna call any sort of a bottom here. We need to develop an uptrend and make higher highs and higher lows. But whenever this accumulation pattern's done, this can easily play a nice cycle. And on the logarithmic chart, this looks healthy. You've got falling support, falling resistance. That's a falling wedge overall. And like I said, we're starting to get some type of a move on the upside here with Bitcoin private. So for me as a personal trader, I'd wait for more of a higher low pattern to sustain. But this is a similar dropping accumulation volume pattern that I've seen on new coins that play cycles. Like this part specifically, all this chunk right here on the left, everything kind of right here, looks a lot like when EOS got added to Bitfinex and fell and did its first accumulation period. Let's just go look at what that looked like. This right here, this little pump, and then how it just drops and it looks really intense and looks like it's falling forever and that nobody cares about it. And when you look at it like this, everybody's like, ooh, why would I buy that? That's ugly. There's no volume. That's dead. Look how much volume just dropped, and it just dropped. But that's an accumulation pattern. And it got added to an exchange, and then look at the cycle that it did afterwards. It just ate through every single one of those resistance levels. And, you know, this obviously is finding some type of structure down here. We're waiting for a double bottom or some type of an actual bottom to be found right here for EOS. But there's good support in this chunk right here. It's also support from that accumulation period, and the volume is starting to pick back up in relevance since the downtrend started in 2018. So overall, a lot of these coins are starting to look good. Let's check out Raven really fast here, and then we'll kind of close it off for the night. Like, Raven is one that has been a really, really nice top mover. This first cycle's looking clean. We've got volume starting to increase a little bit right here, but that falling price, falling volume, rising price, rising volume, that's bullish. This is one wave kind of geometry in the market here. And this is very typical of a one wave to retrace this hard too, almost a complete retracement of its cycle. And if this does a three wave, we're talking about a new local high for Raven. You're talking about the potential of going above the 0.06 level and even higher for Raven. So check this one out for sure, you guys. I love this project and the chart pattern that it's painting right now, and watch out for it specifically. I hope that you guys appreciate my little update on the markets today. You guys can always go check out my VIP course on highaltitudecrypto.io if you're ready to take your trading and leapfrog it to the next level. Hey, thank you so much for tuning in today's episode. I hope that you learned something. Hit that like button, hit that subscribe button, comment down below if you have any questions at all, and I will see you guys in the next videos. As always, stay profitable out there.